Good morning. Welcome to the Alpha Pension Group Retirement Recap for Wednesday, April 1st. And April Fools, you're still in your house. With me is Rob Milas, our Chief Investment Officer, and Mark Salamone, our Lead Consultant. So we're going to turn over to Rob for a quick market overview, and then Rich and Mark, we're going to talk about some of the nuances of the CARES Act, as well as some interesting statistics about how people react in a volatile market. Rob? The market was pretty negative yesterday. The futures look even worse. I assume this is because of Trump's comments?
Yeah, I think it is. Equity markets closed down, as you said yesterday. The S&P dropped 1.6%. Again, that's the large caps. The small cap, Russell 2000, fell a modest 0.45%. And the Dow 30 closed down, capping the worst Q1 performance quarter on record. You see certain names that were particularly hard hit during the quarter, Boeing, Exxon, and Chevron. We also had the notice this morning that Macy's is going to be removed from the S&P 500 after dropping more than 70% over the last year. We also got consumer confidence numbers for March yesterday, and they dropped to a index level of 120 from a level of 132.6 in February. And again, while this is the lowest reading since July of 2017, experts were actually predicting a lot worse, given that it didn't go as far down as they expected. It can be viewed as a positive as well. And then, as we think about the hardest hit industries, it's almost hard to imagine the impact. So think about it. American Airlines reduced its flight schedules by 60% in April and 80% in May. Marriott Hotels is canceling all their reservations in London until June 15th. That's 2.5 months in one of the major cities of the world. And then Cheesecake Factory, with 294 stores and 38,000 employees, told their landlords that they will not be able to make their April rent payments. So I'm just giving you a magnitude of a few examples of, larger companies that are getting hit. And obviously, as we've spoke about a number of times, the big impact of this particular downturn has been more on the small business owners. So you can only imagine how bad those individuals are being hurt.
Thanks, Rob. Many of the areas of the economy are being hit hard, and that's why there's the economic stimulus package called the CARES Act. So with this comes many rules and even more nuances. So Mark put together a little quiz here today of the 5 most misconstrued nuances, and he's going to try to see if I can get some of these wrong or try and quiz me.
Fairly confident you're going to get one wrong. So let's go through what I believe are the 5 most common things that are probably being misunderstood because there's just so much information going around about this. True or false? Is the coronavirus distribution considered a hardship distribution?
False, actually. It feels like a hardship distribution, but entirely different type of distribution. It is not a hardship distribution.
As much as it pains me to say, you are correct, Rich. Number 2, true or false? Plans have to offer the expanded coronavirus-related distribution or loan options. So is it a requirement for plan sponsors to have to do this or not?
It is not a requirement, actually. Plan sponsors can opt out if they'd like. However, it is a negative consent. In other words, if they don't raise their hand and tell their administrator, then they would automatically adopt these provisions.
You're 2 for 2. Number 3, true or false? Existing loan repayments, can they be deferred or not? So existing loans are already outstanding.
This is one actually I think is very confusing. I know I personally got a lot of questions about this. Existing loan payments can be deferred. In other words, if you take a new loan, but also you had an outstanding loan, if you're in year 3 of year 5 of your amortization schedule, you can defer the payments for 1 year.
Yes, you have to be able to prove that you're affected by coronavirus, but yes, and when we say affected, furloughed, laid off, reduced hours, you have to have child care at home. You have to have a reason, but yes, you can defer existing loan payments. So that's good news. True or false? The waiver of RMDs applies to both defined contribution and defined benefit plans.
Actually, I don't know this. I'm going to take a stab at it and say true. It does apply to both.
I've been waiting to just make that sound. You are false, sir. That is it applies to individual account plans, not group defined benefit plans. So defined benefit plans do not have the waiver of the RMD. Number 5, True or false? Plans must be amended by the end of 2020 to allow for the CARES Act loan and distribution provisions.
So no, Mark, actually, plan sponsors have until the year 2022 to amend their plan documents for these provisions so they can operate under these provisions without having to adopt any new plan document or summary modified SPD or anything like that.
4 out of 5. These get degrees. So I got what I came for. I wanted one wrong. You got one wrong. So we were able to stump you.
I'll take it 2, way better than my grades in high school for sure. So lastly, I want you to take a look at this chart. I think it's pretty interesting about how Americans have been acting in the latest financial crisis. So there's 2 charts here. On the top, we show different generations, millennials, Generation X, and baby boomers, and how they've reacted in terms of did they stop their contributions or in fact add more money into the plan. And millennials, for all the grief that they get, actually increased by 24% their contributions to their retirement plans, to their savings in general, whereas baby boomers only by about 5%. I thought that statistic was interesting. And even more interesting is the chart below. So in general, regardless of the generation, how did Americans act? So 66% of Americans intentionally did not change their allocation. In other words, they didn't move into cash or make any sudden moves. 11% did, however, move their money into different types of investments. Mostly what we saw was moving into cash. And when you do this, of course, you're locking in those losses. And most often we try to advocate or recommend that you don't do that. 13% added more money into the plan, which is a great statistic. Obviously, these stocks and mutual funds are at historic lows, so you're buying in at a good point. And 10%, I'm jealous of this demographic. 10% don't even realize that the market is volatile at all. So 100% of those 10% make me jealous. And maybe unintentionally, they're doing the right thing as well. So that's it for today, April 1st. Thanks so much for joining, and we'll see you tomorrow.